good morning. This is ET Now, and you've tuned in to Buy Now, Sell Now with me, Karunya Rao. Let's kick off the show by taking a look at the top headlines of this hour. First up, today's expiry, and ahead of that, the markets are trading largely lackluster. You have a flattish move coming in on both the benchmark indices, with Sensex down about 50 points. Nifty is down by 0.1% in trade. But yes, the good news here is that Nifty is on track for the best series since April 2020. And if you look at Nifty Bank, it's poised for the best series in the last 3 years. So fantastic move seen, especially in the banking counter this series. And on the back of that, you're looking at such a stellar record-breaking rally and a record-breaking close in the last 3 years for the Nifty banking index. You have India upgrades coming in the meantime. Credit Suisse has upgraded India to market weight. You also have BlackRock, which is overweight on India's investment grade, and quasi-sovereigns due to easing amid the weak economy. Moving on to Interglobe Aviations, you had CITI downgrading the counter to sell with a target of 1,400 rupees per share. They believe that the stock at this point is flying at too high an altitude. The market share might have peaked. Many imponderables regarding sustainability of Q2 drivers. They continue to value Indigo at 2.2 times of FY22 EV to sales ratio. Earnings share coming in. Meanwhile, for Siemens, you have a solid margin expansion from 11.1% to 12.9%. Profits came at 330 crore rupees, revenue at 3,546 crores. And finally, you have some M&A boost coming in for Laurus Labs, which is all set to acquire 72% stake in Richcore for 246.7 crores. The acquisition, do remember, also marks Laurus's entry into broader biologics and biotech segments. It's going to drive scale and operations at Richcore to enable it to become a dominant player in the biotechnology segment. All right, pulling up real quick the quiz question for the day before we dive into Buy Now, Sell Now. This morning we asked you, which of these branded apparel companies reported the highest margins in Q2 of FY21? The options were ABFRL, Trend, Shopper Stop or Arvind Fashions. If you've tuned in just now and would still like to participate, if you think you know the answer, log into Twitter. Follow us on Unity Now Live and post your answers in the comment sections of the quiz. Moving on then, let's quickly see how the markets are faring. Like I flagged off, it's a quiet day ahead of expiry. Nifty is completely flat and so is the Sensex. Broader markets marginally in the green, but even the gains there are very, very slim. You have a small cap index gaining about 0.2%. Mid cap index is up just about in single digits as far as the point move is concerned. And as far as sectoral performers go, let me quickly pull up the key performers that are active in trade as far as sectors are concerned. You have some names from the financial services space doing well in trade. Nifty Pharma is the big sectoral gainer, up 0.7%. Some gains coming in for a few select PSU banks. Nifty Metal is up about 0.2%, and so is Nifty Realty Index. As far as the heavyweights are concerned, the Nifty 50 names, you have Adani Ports gaining 2% in trade. Grasim is up almost 2% as well. You have the likes of M&M, which has really climbed quite sharply in the last half an hour or so. Sun Pharma is up more than 1%, so is Axis Bank and Bajaj Auto. On the flip side, there's Eicher Motor, Tech Mahindra, IndusInd Bank, as well as Maruti. Let me take it across to my colleague Jayesh as we move closer to the expiry of the series. Jayesh is here to sum up how the index performed in the November series, the F&O gainers and the key losers. Jayesh, take it away.
The November F&O series has been extremely positive for the large cap stocks because the Nifty is on course for the best F&O series since April this year, while for the Nifty Bank it is set for the best F&O series in over 3 years. But before that, let's address how the market rollover picture looks like. For the Nifty, it has been extremely strong at about 64% as compared to its 3-month average of 57%. While for the Nifty Bank, it is more or less in line with the 3-month average at about 59%. But some of the other sector indices that have performed extremely well are the metals and the real estate stocks, along with the PSU basket. Not too far behind is the broader market indices, the Nifty small and the mid cap index, almost double digit return for the small cap space as well. But the two laggards and the concerns in the market would definitely be the Nifty IT as well as the Nifty Pharma index, though they have also managed to return positive for this FNO series, however have been the underperformers of the series itself. As far as stock gainers are concerned, Bajaj Twins really stand out over here, more than 40 to 50% return for those two stocks, along with Shriram Transport, IndusInd Bank and Chola Investment, all of these stocks belonging to the financial space. The FNO losers is extremely interesting because you have three index names along with Reliance Industries that features in this list, about 4% negative return, with UPL and Cipla also featuring in this list, along with Muthoot Finance and Dabur India.
Thanks, Jayesha, for that. Well, let's move on now and, take a look at some of these stocks that are really in action today in trade. Siemens among the top gainers in the broader markets, Laurus Labs as well. Tanla Platforms, the rally over there continues. This, of course, has been the cynosure of all eyes, especially after Manta Investments as well purchased shares along with another foreign investor. Bajaj Auto, Interglobe Aviation, too gaining. The future group stocks, of course, after that note from CCI is in focus. Affle India, we just spoke to the management earlier in the day. Astral Poly, a very interesting stock. It's been a big multi-bagger. Imami, remember recently it forayed into the entire home sanitization space. KRBL once again in focus on the back of the rice exports bit, and Fine Organics. These are some of the big movers and shakers today in trade, and we're flagging them off on BNSN Stock Cloud. All right, well, let's move on now and bring on board our guest. We have Kunal Bothra on the technical. Saurabh Jain of SMC Global Securities joins us now on the fundamentals. Gentlemen, good morning. Kunal, let me go across to you. Expiry week, what do you have in your mind in terms of, how we could be wrapping up this session? It's definitely a very a profitable one for the Bulls, the November series. What do you think is in store for December?
Well, absolutely, Bhumina. So, good morning, first of all. I think it's been a tremendous November series for the markets, both in terms of the Nifty as well as on the Bank Nifty front. But I think today seems to be a bit of an off day. I would sense that it's more of a very muted kind of a expiry start, and this is atypical of what we've been accustomed to in the first half of the trade, because first half of the trade is generally very buoyant. It's full of activity, and you see a lot of stocks buzzing around. But I think today it's a bit different. So I would expect that maybe the rollovers, for major part of the stocks as well as for the indices, seems to be getting over. And I think the expiry or the the volatility which you typically see in the expiry day could be, I think, remaining for the last 1 hour, last couple of hours of trade today. So I think for the next couple of hours, I would expect a bit of a mutual price action, and then the prices could probably pick up pace in the last hour or so on the expiry day. Now, I also believe that there is a trend which is quite evident today, which is the mid-cap stocks, which are seeing some fresh buying today. So I would concentrate on two stocks in terms of recommendation for from the mid-cap space. First one is about India Cement. Now it's very interesting because after that buoyant up move, the stock has seen from 130, 135 levels to almost the 155, which it tested I think 2 or 3 trading sessions back. It's starting to show some very positive signs on the short term as well as on the medium term aspect. So I would recommend a buy on India Cements from current levels, expecting a target of 165 plus. Stop loss could be kept at 148 mark. The second would be a buy on Polycab. Now again, a very interesting chart. It's forming a classic what we call as a bullish flag pattern on the daily charts. 945, 950 was the breakout level for Polycab of this bullish flag pattern. So above this, I would expect the stock to gradually move up towards 1000 plus levels. So a near-term target of 1000 plus on Polycab, traders could look at a buy. Stop loss could be kept at 930 levels.
At Saurabh, hi, morning. What are your fundamental calls for our viewers?
My first pick would be RBL Bank. Good morning. The bank is, seeing a lot of traction coming in terms of growth. They are expecting credit growth to revive from Q3 onwards. They have maintained their capital adequacy ratio well and shown improvement in the net NP also. Recently, they have raised money approximately 1,500 crore to shore up their capital. We are expecting the stock to see price of about 265. The second stock that I would be recommending is Polycab only. The company is leader in the wires and cable segment. They are seeing good amount of traction coming in the FMEG segment. They are making headway into the electrical switch gears also. They are reducing their debts. In FY20, they posted good numbers. The management is quite confident of better days ahead. We are expecting about 1,030 rupees target for the stock.
All right, thanks for your picks as well. Request both of you gentlemen to stay on with us. We'll address viewer queries. I think, Saurabh, you've shared one idea with us. Is there another stock you'd like to flag off?
My first idea, and the second one is the Polycab. For the RBL, we are expecting target of 265.
Right. That's right. Okay, thanks for that. Slipping into a break here. Stay on with us. Kunal and Saurabh and also our viewers will address all your queries and emails on the other side. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. CITI has downgraded Interglobe Aviation or Indigo to sell from a neutral, and the target price is 1,400 rupees. What are the reasons or the triggers behind this downgrade? Let's go across to Vivek Iyer. Vivek?
Interesting note coming in from CITI this morning. As far as Indigo Airlines is concerned, after a long time you're seeing a downgrade. But what CITI is saying about Indigo Airlines is that, number one, they've downgraded the stock to a sell from a neutral stance that they had earlier. Their earlier target price was 1,300, but they've upped the target price given the fact that the stock is already trading much above their target price. The current target price that they have set is 1,400 rupees a share. Now, what CITI is saying is that Indigo stock is up almost over 42% in the last 3 months, versus the Nifty is 14%, and they believe that this adequately prices in the gradual improvement as far as the domestic air traffic and Indigo's strong market share gains are concerned. But however, the current market price ignores competitors' ramp up and the weak pricing environment that airlines are currently forced to operate in. Also, one of the worries remain that there is a significant amount of uncertainty about the sustainability of the strong second quarter drivers, and this is what is prompting their downgrade from the stock from neutral to a sell stance. They also believe that the market share gains may have peaked. Significant driver of Indigo's share price, according to CITI, has been expectations of consolidation in the industry, given the fact that a lot of airlines were actually grappling with very weak balance sheets. However, what they are saying is that Indigo's market share may have peaked at 60% in July 2020, and it has fallen quite significantly to 55.5% in October, and they believe that the market share could actually trend lower as the peers actually start to ramp up. So overall, a negative sell call coming in from CITI on Indigo Airlines this morning.
Thanks, Vivek, for that. Meanwhile, Basant Maheshwari told us that one can look at a reopen trade as possible bets. Within that, he had a toss-up between Indigo and SpiceJet. Listen in.
You would have to look at something that survives a lockdown. And I say this not because you want to protect money. So obviously the last few months we thought that why not buy liquor companies? But you don't just want to buy a company to survive a lockdown, because if you want to survive a lockdown, you go and do a bank fixed deposit instead. So you would like to look at consumer companies. You would like to go look at companies that are maybe in the restaurant business, maybe supplying food or quasi food or whatever it is. Or maybe you would like to look at rural themes. So when I say rural themes, it can't include fertilizers, because if you sell fertilizers, the government won't let you charge too much. So there are specific rural themes that would benefit from the new improved Banrega that the government has announced and things like that. So across the board, there are several opportunities in the mid and the largest mid-cap space. So maybe from a 15,000 crore market cap to a 50,000 crore market cap space. So I think that's the spot to look at. And then there are several companies right now to choose from.
All right. Okay, well, that's, of course, about Interglobe Aviation. But it's time to bring on board the questions and queries that you guys have written in to us. So let's take our first question coming in from Lukesh Trivedi from Patna. He says that he purchased 150 shares of UPL. He bought this at 589 rupees per share. So it's he's losing a bit of money. Now he wants to know what's the short to medium term view for the stock price, if he should hold or exit. Now, Kunal, we have seen this stock actually come off quite a bit. There were concerns with respect to the whole KPMG quitting dilemma, etc. But this is the one stock that's actually not really done as well as its peers from those March lows that we saw on a comparative basis. Yes, it has definitely bounced from the March lows, but still, it's just well gone from 250 to 420 rupees. We've seen other companies do much better, especially from the blue chip Nifty names. So, what's your view on a UPL? And he particularly wants a short to medium term view.
So I believe that yes, Mumina, as you rightly flagged off, that the near-term trends are not encouraging for UPL. Now, look at it this way: in the best of the market times, and especially in the last 2-3 months specifically, when you have the markets roaring up, quite strongly, you would want all parts of the markets, and especially the benchmark index, to try and participate on the upside. So whether it's a late participation or early participation doesn't matter. But if a stock remains muted for such a strong and a vibrant market, it tells you that there is an underperforming. The undercurrent is still very I would say skeptical for the stock. Now technically, it's also not a comforting sign that the stock is below its 200 moving average. In fact, it broke below the 15-day moving average, I think, in the month of October, and since then the stock has been grinding lower beyond below that as well. So on the short term, on the medium term charts, it's not something which is encouraging. Now near term trends could revive only if the stock breaks above the 450 mark. 450 is the 200 moving average breakout. But I believe for that to happen, the stock needs to have some sort of a positive trigger, in terms of news flow, in terms of some event which is lined up. Till the time it doesn't happen, I believe that the stock could remain muted, could go into a downward trend, and could continue to languish on the downside. So I think the call has to be that you have to try and hold the stock or buy the stock only if it crosses about the 450 mark. Below 450 levels, I don't see any major trend picking up for UPL.
Okay. Saurabh, how are you reading into the fundamentals of the company? While Q2 performance was decent, the stock still continued to languish. There was also reports that SEBI had asked for further clarification after resignation of auditors as well, KPMG from the Mauritius subsidy, but they haven't been able to sort of get clarity on that front either. So going by the fundamentals and the news flow that has been trickling in, what would be your advice for somebody holding on to UPS at such high levels?
I think some of the concerns you have highlighted are quite prominent. I mean, the auditor have resigned from the subsidiary, Mauritius subsidiary, which is a holding company for all the acquisition that company has made. And it is the subsidiary through which they have raised so much money. The debt on the balance sheet is close to 23,000 crore. That is also one of the concerns. So the UPL is not having best of the books, and the maintenance is not that great the way we see with the kind of banks like HDFC Bank and all. So this is one of the concerns which has come to the fore. I think because of this concern, the stock would continue to be would continue to underperform. I mean, when such concerns comes to highlight, nobody wants to put money. With respect to the operations, I think operations have been decent. The reported numbers have been decent. They have guided growth of approximately 6% in the revenues and bottom line growth of about 12 to 14%. But I think these concerns would continue to be there in very much in the market. My advice would be to get out of the stock and switch over to banks like ICICI or Axis.
Okay. Thanks, Kunal, as well as Saurabh for joining in and helping our viewers with their queries. Unfortunately, that's all the time we can dedicate to that today. Slipping into a break here, more updates on the other side. Keep it with Buy Now, Sell Now.
Hello and welcome to Buy Now, Sell Now. Very severe cyclonic storm Nivar made landfall near Puducherry in the early hours of Thursday, bringing heavy rains to the Union Territory and parts of Tamil Nadu. The Indian Meteorological Department, or the IMD, officials said that Nivar weakened into a severe cyclonic storm after it crossed coast near Puducherry. We're joined by Shilpa Nar with the ground report.
The latest we're picking up from Chennai Airport is that the services will remain suspended till 9 a.m. today. Initially, that proposed that the services will be suspended till 7 a.m. But looking at the condition, looking at the weather condition, they've decided that they will extend it for another two more hours. So once they assess the situation once again, they will take a call on whether they need to resume services again. But that needs to be seen. But this is the latest that we're getting, that the operations have been suspended till 9 a.m. today. And even several trains have also been partially or fully cancelled. Now, to answer your question about power disruption, I've been speaking to several officers on ground. They do agree that there has been power, disruption in several pockets of the state. But the electricity department is attending to all of these problems. There is no massive outage of power as such. So the EB has been pressed into action, and they've been given strict instructions that power should be restored within 12 hours. So that is the instruction that has gone from the government. So all the teams at this point in time are pressed into action.
Shilpa, for that, let's quickly talk about the FII and DII moves seen in November so far. If you look at DII inflows versus outflow trend, there's been a record monthly outflow at over 38,000 crores so far in November 2020. And if you want to see what the high has been and when we last clocked in a record monthly inflow, it was back in March 2020 with 50,000 crores worth of DII inflows coming in. So this is the key trend that we just wanted to flag off. And if you look at how the trend has been since March, the best case scenario, well, has been perhaps in the month of June, actually in the month of May as well, when we saw inflows worth 11,356. June was muted, but at least still in the positive. We did see some inflows coming in to the tune of about 2,400 crores. But July, August, September, October and even November is when you have been witnessing back-to-back outflows. September was largely flat, but it wouldn't really count much as inflows, as the number is almost insignificant at 110 odd crore rupees. November is when we've witnessed a record outflow so far of close to 40,000 crores. It's been the largest outflow that we've seen all year, and that is a trend that one wouldn't be too happy watching out for. As far as equity flow is concerned, equity outflow, like I said, has continued for fourth month in a row. In the last 4 months, there has been an outflow of about 10,000 crores. The factors at play, well, it's largely the fact that DIIs are seen booking profit on market rallies, mutual funds are facing redemption pressure, and only about 31% of mutual fund schemes have beaten their index so far this year. So that's the big trend that we just wanted to flag off as far as DII trends go. September was the overall positive. Like I said, for the equity outflow, only from mutual funds was fourth month in a row.
All right, well, that's of course about FIs and DIs. Interestingly, while FIs seem to be still pumping in money into the Indian equity markets, DII somehow
Okay. I think we've got a bit of a glitch there. Let me take it across then. Let's talk about what are the latest notes saying about mid-cap strategy from CITI and Credit Suisse's market strategy. Let me first talk about CITI's mid-cap strategy. Surendra Goyal tells us that there's improving macros, there's some catch-up. However, he recommends investors to stay selective. Mid-cap index trades at par with large caps on PE ratios. Mid-caps also trade at a significant discount on price to book versus large cap names. The EBITDA performance of mid caps under CITI's coverage has caught up in the second quarter. Mid and small cap funds are also experiencing accelerated outflows in the recent months. Top mid cap picks for CITI would be ACC, Apollo Hospitals, Chola Mandalam, Crompton Consumer, Endurance Technologies, Gujarat Gas, Federal Bank, Sobha, SRF and Z. And you have some updates, positive ones coming in from Credit Suisse as well. They've upgraded China stocks to overweight, India to market weight. Upgrades for India continue to pour in. That's the big headline, I would say, that one should focus on at this juncture. In fact, earlier in the day, we spoke to Sanjay Mukim of JP Morgan. He said that the next leg of rally in banks will be driven by growth. Listen in.
The next leg of rally or up move for banks will have to be driven by growth. That is the next big question for financials. In this sort of an economy which is still healing, that's the right word, how do financials outperform the system? How do they continue to maintain the strong growth that we expected of them? And to my mind, financials or private financials which are able to stand out, deliver that high double-digit growth will be the stocks that outperform here on. And if that's the framework, then you have to look for private financials which have lower cost of funds, which have the risk appetite, which have the liquidity to continue and lend in this environment.
All right, slipping into a break here, but before we do that, quick reminder on the BNSN quiz in case you still want to participate. We asked which branded apparel posted the highest margins during Q2 FY21. Options being ABFRL, Trend, Shopper Stop, Arvind Fashions. If you know the answer, you can still participate on Twitter. Slipping into a break, stay tuned to ET Now.